Hi, good morning to everyone. I'm P. Radhashi, Assistant Professor, Department of Commerce. Today we are going to see about the financial accounting. That next process is known as the classification of asset and liabilities. When we are doing a business, we want to know what is the asset and what is the liabilities. Let me know about what is the asset and liabilities. That is the positive network of the liabilities and asset. When the asset is increasing in the business, the cash, inventory, accounting transaction, accounting receivable, and real asset and equipments and the vehicles, assets, machineries, furniture, we can be taken as a asset categories. Liabilities is nothing about we are in the proper condition to paying our loan, that is known as a long-term loan, the vendor's payment and the employees benefits and the employees wages. These are the liabilities. That means the asset is the saving of the business. What are the goods have been saving for the business? It have been taken place by the asset. Liabilities, we have to proper condition to pay all the categories that on the full in charge of the business, it can be taken in that way of the asset and liabilities. Asset is the saving. The types of the asset is known as the convertibility, physical equipments and equipments of their usage. The customer's asset and the fixed asset and tangible and intangible equities of to be taken when non-profit of the asset. Asset side is a current asset, fixed asset, other asset. And the liability side, we can say the current liability, long-term liability, shareholders' equities. These are the classifying of the balance sheet in the format of asset side and the liability side should be take place in their handling of their current asset, fixed asset, tangible and intangible asset. It had been taken as the physical existing of the type of the accounts by the usage of the operating assets and non-operating assets to be taken place in the physical balance sheet of the schools. In that asset, there is a categories of them and can be say about the tangible asset. Tangible asset is nothing but land. You can say as the land in the building, plant and equipments, plant and machineries, furnitures and vehicles, investors, inventories and receivable cash, etc. These are the tangible asset. What is the intangible? We can say that is the goodwill. We have created a business in a good way manner. So we create a name in a good manner that is committed in the goodwill of the business. Patents and trademarks, copyrights, brand. These are the intangible asset. We can able to see, we can able to feel that. That is known as the intangible. And the tangible asset means land we can able to feel and we can able to see and we can able to touch and identify that what is the his. That is the intangible is the there's nothing but we can't able to feel that what is this and also to be handled in that way of the asset and liabilities. That we want the convertible asset. It can be easily convertible and physical experience and the here usage of this operation. In that way only fixable liabilities of equities, long-term liabilities and current liabilities and contingent liabilities have been take place by the type of asset as by the convertibility of the current asset and non-current asset. Tangible, the intangible, operating and non-operating asset. Operating means we can able to operate the goods and we can able to non-operate the goods. The amount is spent for one purchasing at land. We can be able to operate and operating we can able to say that the land. So we have to be categorized as the non-operating cash to be convertible by these categories. The way of tangible and intangible take place by the categories of the circulating or non-current assetable. We can able to feel in the fixed of the goods owned by the equity on long-term current asset and the contagible assets. In the way of the when we are purchasing for a business. We are purchasing or spending. It can be categories of the business purpose. We are purchasing, for example, we are putting a 5 lakh to purchasing a machinery. It is the asset of the business. It can be taken by not as a purchasing, it is a asset. We are purchasing a land for doing a business or good on something, we can extra that all are categories in the asset. That it is all the business asset. Land, machinery, plant, and they're giving a payment something salaries on the otherwise as the land and liabilities of the asset. It can be taken by the proper way of goods in the manner we can able to find when the asset value is increasing by day, then the business going in the profit way. Liabilities is also increasing. We increasing we have a proper way of handling in the condition of liabilities. These are the asset and liabilities in the different way categories. Thank you.